Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look again on the euro currency as usual. So today as usual we also will take an in-depth view on the recent Fed statement. What does it mean for the markets, how market treated and what we could expect in the nearest term. Well, in two words speaking, our position is that it still stands in favor of the United States dollar. Although some investors treat it as a dovish because Fed has decreased the forecast on economy growth, on inflation. Others treat it as a bullish and hawkish because it leads to a flattering of the yield spread. It means that the treasury market treats it as a bit hawkish. But all in all, if you'll take a look at the weekly chart, you will see the candle that mostly indicates indecision. Our position is that investors have not made any decision yet how to treat the Fed statement. So they will analyze it, and I suppose that somewhere in the next week we should get some direction. Our position is that since the Fed was very delicate statement, has provided delicate statement, it doesn't put the markets in a tight limits. So it's lots of time till the first rate change, till the starting of the tapering, till the end of the tapering. Overall forecast for economy is positive, so it is soft for the markets, and let's market to remains on its own driving factors. That's why we do not expect some really strong action, very speed and direct trends on the market, but still we think that it stands more in favor of the United States dollar because we need to compare, we need to analyze the Fed statement in a comparison to the position of the central bank in Europe and how the balance position stands. And we think that the position of the United States dollar currently stands as stronger. That's why maybe we'll not get very fast and strong trend, but some downward action gradually should be continued. This is our view in the long term. Besides, from the technical side, we also have some reason to suggest that market should drop a bit more. So long-term analysis you could read in the report. Speaking on the short term, actually we do not need any other charts because with the whole week market stands in relatively tight range, and this chart that we have currently it's sufficient to provide the analysis for a Monday. So first of all, as you can see that it seems that our Friday suggestion has been completed by the market accurately. Indeed, we've got a kind of the preparation, let's call it as a preparation for the head and shoulders pattern. Drop indeed has happened as we suggested, and those of you who would like to close the shorts probably done this. So others who keep it, well, also have chance to succeed it because first of all, our reversal bar on the daily chart, if you remember, this was reversal bar. It stops and stands valid, so it means that this candle is still bearish and still valid, so market is not returned back above the confluence. This is first moment. Second moment, take a look that the sell-off again has followed rather strong on the final stage of the hand shoulders. You probably know that every time I talk about this. But this really works. So when you see this strong sell-off, right arm on the hand shoulders, this is big challenge for possible failure of the pattern. So this is the reason why I personally have absolutely no desire to take the long position based on this pattern. Finally, take a look at the reaction. This type of the reaction, guys, is definitely not the reversal. And it's absolutely has no thrust, no power. This is just technical bounce and reaction on the 618 support. And it takes the shape of the ABCD pattern. So my suggestion, at least I'm not excluding the chance that we could get some kind of the ABCD shape here. Let's pull back in the shape of the ABCD. And we could get garbage cheaper to sell where market could start dropping again. That's the scenario that personally I'm watching on euro currency. It means that, speaking on the bullish positions, we're still keep our actually position that we announced a couple of weeks ago, that until 1620, we are not considering any long position here. For a short positions, well, theoretically, you could try to use it with this retracement. Those of you who still hold maybe shorts also could keep them with the possible downward action. Besides, be aware of the Evergrande situation. Keep an eye on it. Currently, it stands in favor of the downward continuation because this problem has not been resolved with the payment of the Evergrande. On Friday, it takes again, turns again on the negative sign. And if this problem will not be resolved, that's definitely increase the demand for safe haven assets, for gold, for dollar, at least in the short term. That could support and even could trigger maybe this downward action that I draw here on this chart. That's in general what we intend to keep an eye on euro in the beginning of the week. So let's keep watching what will happen. So once again, no longs. We're waiting for reaching of the major support. From short position, well, you could make a decision, but as I said, keep an eye on the situation on the news stream. So because it might be important for current situation. And finally, guys, don't forget about the grabbers that we have on the dollar index. They suggest to drop below these lows, and well, that's another reason why we're mostly think that downward continuation is more probable in the current environment.